Hello, do you hear me?
Yeah.
Yes, hello, Strongman and Dan. It's Andre from the debate with TQQQ. I just want to say that I apologize for my behavior and that I really love your community. I watch all your videos, and to be honest, the value from watching you destroy grifters is so valuable. Because grifting is a big part of finance at this day and age. So I want to make part of this, and I'm really sorry. I will behave.
You don't sound the same.
Are you still buying
Yeah,
TQQQ?
Yes, I am 100% TQQQ still.
Hey, Big Dong, how long are you going to be in the voice chat for? How long do you have this open for? Do you think, Chris? So I missed most of it then. Yes, sir. That's crazy. Yeah.
So
All right.
just to say, it's been almost 1 year since my debate with Strongman. Now, unfortunately, it wasn't uploaded because I put.
What were
some
y'all
W-
debating about?
TQQQ versus VT. Yeah.
Okay.
So I have kept learning. I've been obsessed with learning, and I am 8 months later from our debate, and I am 100% convinced in TQQQ. Now, look, it might be delusion or it might be
I haven't
reality.
learned anything, and you're not obsessed with learning.
Has Big Dong convinced you to buy VT yet and stop fucking around with TQQQ?
I will be 100% TQQQ for a very long time, actually. But look, I'm here to kind of provide my standpoint and say why. Also, I just love the community because we shit on grifters, and that's the best thing ever. So, I've grown up a bit. I'm now almost 21. And, TQQQ has been crashing, but my portfolio is only 18,000, and I'm DCAing like 2,000 a month. So there is zero risk. I have zero risk. And I'm serious when I say that. So this will outperform VT. It's structural, because did you guys know that stocks only move on buy and sell orders? They are not connected to the real world. Are you aware of that? So
It's triple leverage, bro.
Oh, can I just can I just say something? Because is this on YouTube right now, or what are you doing? Okay, okay. Because basically you said I made a retarded decision, but fortunately I have no money, so the consequences were very minimal. That's essentially what you said. Yes, that's exactly. You said I lost money. You said I lost money, but fortunately I don't have much money, so the consequences weren't very high. But if this was actually your strategy and you had money, you would have lost a shitload of money. So like,
bro, what
you're
happened if
admitting that your own strategy is bad, but you don't have to live out the consequences because you have no money.
What happened if the market goes down 80%, bro?
I love the critique because I can get to the critique and actually see if it's right or wrong.
You're gonna get wrecked trying to short NASDAQ, bro.
I'm not shorting NASDAQ.
31% from the highs this year.
Holy shit!
Yes.
You
get
and it's not even a fucking correction.
Also, please,
we're not even there yet.
Please stop with your cope. Like, I love this community as a deflection from us just pointing out that you're doing something stupid. Because all you're doing is you're taking like valid criticism and going, I love this community because you guys like to insult me. No, we're pointing out that your strategy is stupid, but you're very hard-headed. And you say like learning, but you're not.
By the way, let me talk, please. So you remember, Strongman made a video in 2021 where he said QQQ is trash. But look, 4 years later, he got outperformed. 4 years later, he will get outperformed. Again, it is structural and it's a reason. Look, there are
everything
only two things.
Outperform VT.
Yeah, look, there are two things that only matter for returns. You have money supply expansion and participation. That is the only two things that matter for returns.
I would let you finish, but you just did something wrong. You said, since 2021, he made a video saying TQQ is bad. And since 2021, it's negative. Oh.
QQQ.
QQQ is fine. No, QQQ I think is fine, but you're doing some like leverage shit.
Yeah, TQQQ
Dude, if you bought, nobody would.
Look, it is not exactly
TQQQ.
Yeah, so
if you bought TQQ in 2021, you're down 10 to 15 to 20%, while the market's been up like 50 or so percent. So that's
QLD.
really solid
what about
outperformance.
QLD?
It's pretty
Is
hard to do.
QLD good then? What do you think about QLD, Strongman? It's 2 times Nasdaq. 2 times Nasdaq 100.
It's still leverage, bro.
Isn't that just like Joseph
The
Carlson?
same shit.
Isn't that just like?
Yeah, you don't need it.
There's some historical.
If you put in $2,000 a month in the market, you don't need fucking leverage.
Look, there's big difference.
I think there's been I think there's some historical backtesting, and I'd have to look that like 2x might be okay. But the reality is, why do you feel the need to leverage up? I mean, my question.
Because what people don't understand is that the S&P 500 and Nasdaq 100 are guaranteed to go up forever. It is structural. It is guaranteed. Why?
Not true.
Because the American retirement system is inside the stock market. This is not the case for other economies. It doesn't matter if Nigeria's economy doubles every 10 years. America won't double every 10 years.
What happened if you go sideways for 16 years?
That is impossible unless you get a bubble and the financial crisis, which we had from 2000 to 2010. But there are measures taken. Bubbles will not happen anymore, and financial crisis will not happen anymore because they have learned and they have adapted. Quantitative easing is it's used to prop up the stock market, and they will do that because the financial markets are 100% separate from the real economy. Financial markets are basically just people pressing sell and buy on their broker, and based on that, prices move. Nothing else on earth. They talk about.
So can I ask you a question?
Like the economy or fundamentals or valuations, which are 100% meaningless. Okay, go ahead.
So I agree with you. The market is made by incremental buy and sell orders, right? So the market is made by you or me pressing buy or sell.
And nothing else on earth ever.
But isn't just that like short-term situations?
Well, let me just. So what can happen then is if you or I are just holding the stocks that we have, our incremental buys are very meaningless. However, large institutions, especially if they decide the U.S. has messed up or the U.S. did something wrong, they can move that incremental dollar from the U.S. to other markets. They can move it to Japan. They can move it to Europe. They can move to Latin America. They can move anywhere. And so that would actually create a massive decrease in the value of the stock market, because even though you are holding, that doesn't matter because that's not pressing the buy or sell. That's just holding. So there's no incremental demand either way.
Look,
and so
why would an American do that? Of course, there are some people who believe in China or other countries.
They're doing it right now.
Because most of the money is owned by institutions, and an institution is going to look at this and say, where can I get the best return? Institutions, for the most part, right now like America because the way that it's set up, but that can change. And there's nothing saying that an institution, and it happened before. Look at the 90s of Japan. I mean,
you do not understand the 90s Japan. I understand them a lot better. But anyway, look at every stock on earth. Look at every stock on earth. The top shareholders are Vanguard.
Shut up and please educate me. I don't want
you. Let's talk about Japan.
Bro, you haven't gotten any better than when I banned you. You are still this cocky 20-year-old.
Yeah.
You don't
know, dude.
You have answers for everything when there's people here that have decades.
TQQQ, bros.
It's fine.
My bad, bro.
Triple leverage, bro.
I will do a split, basically. But of course, it depends by situation.
Or go home. Go big or go home, man.
It depends on her age. It depends on so many things. But it won't be 100% TQQQ. That I can tell you for sure. Anyway, so listen, Gondar, since...
Let me explain Japan.
There is such a thing as de-risking, right? You have to de-risk at a given point. So now I'm DCAing 2,000 a month, and when TQQQ, when my portfolio reaches around 200,000 to 300,000 to maximum 400,000, then I will de-risk it to basically 2x Nasdaq 100, or maybe 1x, but 1x will be just opportunity cost, basically. So look, on Japan, Gondar, what do you think about Japan? What do you think the situation is about? So just to understand your viewpoint.
I asked him why I think that everyone thought that Japan was valuable in the 90s.
Yeah, go ahead and tell me. What's your viewpoint on Japan in the 90s? You think America is in the same situation?
No, I think that people thought that Japan would be the leader in just the global economy. because of the technological advances and the cultural approach there.
Or maybe it was a self-fabricated bubble. Have you heard of that? Have you heard of Princess of the Yen, the book or the documentary? It's real.
I haven't heard the exact book, but I could see that there would be a self-propping up of the economy by the government. Sure.
Look, if you want to understand, if you want to actually understand what happened in Japan, I should tell you to watch this documentary, Princess of the Yen. I've sent it in this chat. It exposes basically. So what happened in Japan? The Central Bank of Japan created a bubble and let it deflate because they wanted economic reform. And the only way how you get economic reform is by creating a crisis. And the bubble is the best way to create a crisis because nobody stops you.
Don't think this is what's happening here? It's the same fucking shit, bro.
No, not at all. Because
the same shit.
Here in America, no, listen to me. Here in America, the retirement accounts are linked to the stock market. The central bank in America is not creating a bubble. They will rescue the market. Because basically, when you look at your 401k or your Roth IRA, you see how much money you have. Now, of course, you have to understand, there is zero money in the stock market. Money only exists on bank accounts. So basically, what you have is tokens. Everything is a token. Okay, and it's being propped up or down by inflows. And actually, inflows are infinite because when somebody goes and buys TQQQ or QQQ or VT, the money goes to the sellers. And the seller is in America and they go to spend the money. The money goes to the store pays out the employee contributes to the 401k, so the same dollar is being used infinitely to buy basically S&P 500 and NASDAQ 100. And that is why it will go up forever. Because look, as you all agree,
retail buyers are like 10% of the fucking market.
Yeah, it's mostly pension funds. It's mostly, you know, the Vanguard, the VT Sachs, and so on. It's mostly the big ETFs and big mutual funds. And look, there is a non-stop recycling. The same dollar buys S&P 500, NASDAQ 100 an infinite amount of times without ever stopping. And actually, there is zero money in the stocks because stocks and ETFs are tokens. They are paper. They are not money. Right? It's basically market cap indicates liquidity because the market cap of everything is zero because it's just exchange of money for pieces of paper. There is no money. The market cap formula is wrong. Anyway, so that's because you have participation. And also, the money supply goes up forever. The money supply goes up forever. I don't know if you know this, but every time a loan is created, money is created. That is how banks work. Normies are taught to believe that they lend out deposits. That is 100% wrong. That's not how it works.
Yes, also, that's why the debt is also infinite. Until one day it isn't.
But it will not
here's what I would say, because
the economy crashes because
I want to be clear on something.
And
let me just say this, because I want to explain something. I think here is the fundamental difference that I would say is in your approach of TQQQ versus VT. And I can say something about Japan, but let me just, because I'm going to get back to my workout here. But I think fundamentally the difference is if you're a strongman, you're looking at VT. Strongman is saying simply, I have a very high savings rate. Why would I take on any extra risk when if I look at my savings rate and I map it out and I put it in the all world index, which technically that is, you could make an argument true passive investing. Investing in the US stock market is an active investment. That is a choice. And the S&P 500 index is not a complete passive index. There's a committee that makes decisions, who goes in, who stays out. So there is, just so you know, I'm not a VT. I don't have VT. But I'm explaining that this is, and I think it's a completely logical, fine train of thought, is saying.
You've also been underperforming since 2021 with TQQQ.
Well, but and I think the idea of TQQQ is you're looking at American tech innovation has been extremely good in the past few years, and I want to leverage that up.
That has zero effect on the stock market, by the way, because it is only buying and selling. The company, dude, look, if companies were stocks, then it would be impossible that fucking what happened to GameStop and AMC happened. Look, companies and the stock is entirely different. Entirely different. They have nothing to do with each other. They are zero connection. The only thing
that's not true. That's not true.
So
look.
Well, can I just counter and say,
that is
let me just counter this though.
That is impossible. Let me finish this, please.
Okay, finish it, and I just want to say one thing. Okay.
Yes, it's impossible that the inflows dry out because, as I said, there is zero money in the stock market. Zero money in it. Stocks are paper. ETFs are paper, right? It is not money. The exchange of it is how the market cap is calculated. So market cap indicates liquidity. I've learned a lot, dude. It's 8 months later. I've been learning every single day of my life. Why? Because I know that SPX and NDX are basically a liquidity system. It will go up forever because they optimize the only two things that matter: money supply expansion capture and participation. Strongman and VT is actually diluting the two things that matter: participation and money supply expansion. Dude, Strongman, all of those emerging markets you have, China, Europe, they do not have participation. Look. Without participation, there are no returns because the only thing that drives the markets, which is 100% separate from the economy, is the buy and selling. And buying is infinite, as I told you, because it's just exchange of money. Somebody sells, the money goes to the buy. Look. And nothing else matters. Such as now. No, actually, because a lot of people are inflowing, and basically when you inflow, you let it sit, so you only have the positive effect. You take it out way later. You take it out because people take it. Look, of course they don't go up forever. They have volatility.
Thus far, they have.
You just said he was going to go up forever.
Yes, they go up forever, but they have volatility.
So,
right? Such as now.
Can I ask you a question? Because here's what I'll say. Okay, a couple of things. One is, I see what you're saying in terms of in the short term, you're correct. GameStop.
No, in the long term,
buy U.S. stocks, bro.
Let me just finish. GameStop as an example. That was a short squeeze. That was a euphoria of buyer demand. But what's happened since then? It's sold off, and it's kind of just a company that sits around like 1.5 times NAV. Whatever, that's fine. If you look at most of the largest companies in the world, they are the companies with the largest amount of free cash flow in the world. So I don't think that's just because of buying and selling. I think there's actually underlying fundamentals that drive that. Short term doesn't matter.
No, look. Actually, it's because the people that control the most money were taught that cash flow matters, so they buy it. So that's why, because of the buying, it has nothing to do with the cash flow.
So you're saying that someone's buying Apple because someone told them to buy it, not because it has like 1,000x times the cash flow of GameStop. So you think the difference is like
because they were taught to buy it, because they were taught.
Okay. So then let me ask you this, because you like the Nasdaq 100. 10 companies make up 40 to 50% of that index. What happens if 2 people get told not to buy the stocks in that index and sell them instead?
No, look, I didn't say anyone is told to do anything. I said they are taught. They are taught by the universities, how they do DCF analysis and all their fundamental analysis. Now, of course, it is random at the end of the day because the markets are efficient. That's why, we do index funds. So, look, I'm a bit lost out on my mind. Basically, the only two things that matter is participation and money supply expansion, basically. And that is why the Nasdaq 100 and the S&P 500 is guaranteed to go up forever. Look, Strongman is diluting the inflows because he thinks that the other world operates on the same system, while it doesn't. Right? The other world, look, if you go in Indonesia, nobody is buying stocks. Because yes, in the short term.
You're changing the world, bro.
No, look.
Buy U.S. stocks, bro.
In America, because in America they have the retirement system built into the stock market. This is not the case for other economies.
Yeah, actually, you're going to have
that is a
trend
question
reverse,
I have to think about. But normally, given the fact why look, most people they buy at 20 years old and they buy every month and they hold forever. right? And only in the end they start chipping away. So actually, it is, and I also money supply.
20 years old brokies are not changing the fucking stock market.
Most people are
Money
not buying
supply
and holding for
expansion.
30 years.
It's like it's $1 trillion fucking exchange, man. A fucking 20-year-old with a $2,000 a month is going to change much in the stock market, bro.
He's just talking about the underlying there's a word for it. There's something bid. It's like the people who buy their retirements every Friday. Like, and there's something to be said about that. I'm sure that does add some buying pressure. It may be marginal, but that does add some buying pressure to the index. I don't think that's but I don't think that alone is enough to prop up stocks. Like I said, especially if you're talking about the NASDAQ 100, you're talking about an extreme amount of concentration. If you had your own portfolio, having 50% in 10 stocks is pretty concentrated. And most people, I mean, they're probably somewhere in that camp.
And for the S&P, it's 33%. And for VTI, it's like, 25%. So listen, everyone's in the same boat at the end of the day. And strongman, you know. Look, it went down 35% in 2022, and TQQQ. Dude, listen, do you know how daily resetting works? 100%, and I have thought about that. It goes down around 80% to 85% because of daily resetting. That's the thing. It can go down based on those amounts. I would say, basically, due to the strength of the participation and inflows in the modern age, because, if you look at 50 years ago, in order to buy a stock, you had to call a broker and pay an arm and a leg just to buy one share. So, today it's free, instant, and direct, so that's the participation.
It's even worse. So it's worse now than it was back then, actually. Because when panic when
I don't think you were alive back then.
Everybody fucking sells at the same time.
Back then?
All goes,
No, but that's reality.
Everybody fucking leaves the boat.
The participation is a lot easier today.
October 1987.
Look at 2020, bro.
Well, yeah, 2020, but then the Federal Reserve came in and rescued.
My tech stocks, bro.
No, it was 80% back then, actually. But look, due to daily resetting...
Just for fucking cough.
So that's why I do de-risking. Look, I'm not saying that NASDAQ 100 will not go down 10, 20, 30%. It will. But it will not wipe out 3x. Look, 3x is the maximum. That's 100% certain. For long-term compounding, the best one you can have is actually the 2x. Because, in the crashes, did you know 2 times S&P 500 survived 2008 and outperformed the 1x? That means 2x is the minimum, if you look at it. But of course, because I am looking at it of, a DCA, when you do dollar cost averaging, you buy more when it goes down. And also, TQQQ is guaranteed to recover just as the 1x NASDAQ 100. It is just more volatile. For 95%, the 1x NASDAQ 100 will need to go down more than 50%. Now, so look, it went down 35% in 2022. Now, that is quite a crash. Also, we always look from the top to the bottom. Look, if you just go 3 months later, 3 months, backwards, 1x NASDAQ 100, from there to the drawdown, it was only like 30%. So look, if I look at it, I think the maximum drawdown for the 1x NASDAQ 100, unless it's a bubble like 2000, which won't happen because the market doesn't allow that, and there are regulations, and the market will not allow, because every time something goes up now, they think of a bubble.
Thing. But that's the thing. Unless
so the maximum drawdown is 1x, so 3x is safe. But of course, after you have an immense amount of wealth, which is anything about above 200,000, you should de-risk, of course. That is 100% correct. But look, 3x NASDAQ 100, TQQQ is perfect for DCA, because we know how DCA works. Crashes are actually a good thing. Look, strongman, the TQQQ crashed now immensely. If you do a DCA of 2,000 a month for 2 years, I guarantee you that portfolio will outperform your VT, and I will put my heart on it. I would say I will jump I will jump in front of a train if that didn't happen. So that's something you have to think about.
You will die.
That's something you have to think about.
100%.
Because look, when the portfolio value is effectively zero, as it is with me, I have only 18,000 right now, and you DCA 2,000, crashes are a gift. Crashes are a gift. So this is what I'm trying to say. TQQQ is best for DCA, but once you have a lot of wealth, as we know, the DCA has less effect. So I'm doing, right now I've, advanced, so I'm doing TQQQ for DCA, and I guarantee my ass on it will outperform mostly everything. And then de-risking to 2x Nasdaq 100, because also a lot of people don't realize S&P 500 and Nasdaq 100 are exactly the same. Nasdaq 100 simply concentrates the inflows, and you see the same effect when you look at the S&P 100 versus the S&P 500. S&P 100 outperforms. Why? Because when inflows go in, as I said, every month, guaranteed, always, because the participation is high, most of your money actually goes into the Nasdaq 100 and the S&P 500. Strongman, when you buy VT, most of your money is in Nasdaq 100. I don't know if you realize that. Yeah. Yes, that's the point. Now, market cap weighing. Look, I'm not good. Look,
Degeneracy.
I couldn't give a fuck what companies are in the Nasdaq 100 or S&P 500.
100%.
All I care about is the inflows. I couldn't care if trash collecting companies were at the top.
Andre,
and it goes down.
Why are you here? Why are you here?
Because I
you are the same person I banned like months ago. You're the same person. Who are you arguing? None of us are going to do what you're talking about.
No,
so what are you doing? You're just yelling in the mirror.
I have no other community to go to, and this is the best one.
I'm about to like freaking block you, dude.
Look,
you are overbearing.
Go, guys. Let him stay.
Go for a drive, bro.
Look,
Big Dong, let him stay. He has nowhere to go.
Dude, Andre, you need to like back off, and you need to back off people. All right, you can say your opinion, but you need to like back off people. This overbearingness is pissing me off.
It's been 8 months.
We get your point. We got your point about what you think. You don't have to keep like smashing people over the head with it. So
it's just I'm just. Yeah, I would love to debate you after TQQQ goes up again. Okay, so because now I need to DCA. Yeah, look, man. Thank you, man. Thank you. And also, Dan, look, I'm being respectful. I'm sorry. As you see, I'm very passionate about this.
Don't be going after people personally, because then you're gonna have a problem.
That's not what I did. Did I do that?
Dude, I heard you start getting you got a little fucking pissed off in your face. I can hear it. I know you. What are you, Russian? Are you Russian?
Romanian.
Yeah, you get a little hot-headed. I can tell. Like a little too far.
Yeah. But it's because I'm very passionate. I'm not doing personal anything. I'm just passionate about the stock market and how it works. And I find the stock market is a scam mostly. It's just that the inflows are what matters at the end of the day. And it's just I know I'm here to be in the community. I really love it.
You're so sure of yourself, and then it's a scam all of a sudden.
Yeah.
I mean, in general,
doing here?
Triple leverage, but you fucking it's a scam, bro.
I mean,
it's a scam, but I'm going as. I don't even want to talk about this goddamn.
Options are a scam. Actively managed
buy Bitcoin, bro. Just buy Bitcoin.
No, Bitcoin is a scam. Everything is a scam except the inflows. I mean, because you will
triple leverage day trading ETFs.
So I do want to say, Andre, can I just say something? I just listening to him talk. I really think, and this is coming from someone that is invested in or really thinks investing in private equity is a worthwhile investment. You would love private equity. When you're talking about like money flows and it's all a scam, you should read up on private equity. I think you become an investor in that. And I'm saying this seriously.
Private equity is guaranteed to underperform S&P 500, Nasdaq 100 if you think about it. Because, I mean, dude, that's just like over-the-counter selling of companies. That's not really something.
Can you check the stock price of KKR the last 5 years? Just help me understand your point.
Dude, I'm not doing private equity, or it will not underperform 2x, 3x S&P 500, Nasdaq 100. It will not. It's impossible. It's mathematically impossible.
350% the last 5 years. I don't know what TQQ is, but
it's around.
I think his point is about inflows. So yeah, I get what he's saying, but like, are you edged to like political shifters? Because you're talking about inflows that like are continuously going to increase over time, but like, what if there is a major like political like shift and actually the US stop like working as they are working right now, so working towards the retirement with US stocks, and yeah.
Look, man, there is the hypothetical and there is reality. You know, I'm about reality.
Yes, but that's the difference. So when you are invested in VT, you are kind of like acknowledging that you don't actually know the future and you are edged to that. And there's the other way where you can like think things can go like always up. So yeah, basically, it's like just like two opposite positions, I guess.
Can I ask a question out of curiosity? I haven't looked. What's the top 10 holdings of VT? Is it similar to the S&P 500?
It's the same. It's
just
literally the
slightly
same.
smaller weightings, I'm assuming.
Not the same, because you also have
it's smaller weighting to account for the international stock.
And because,
right,
look,
right.
man,
I'm just
something people don't understand. It's very important to say. Whenever somebody buys VT, whenever somebody buys World ETF, and whenever somebody buys anything, most of that money flows into the Nasdaq 100. Because if you look at the top weighings of all those ETFs, all of them, SCHD, like any of them, the top holdings are always Nasdaq 100. And that's what I mean when I say Nasdaq 100. Look.
So, well, here's what I would argue. Actually, can I just make an argument
The
for
S&P
Andre?
500 still has 400 companies that are not Nasdaq 100.
I just want to make a quick thing. Well, just
All right, Big Dong. Thank you for hosting us.
thanks, Starman.
Thank you.
Thanks, man.
Yeah.
Thank you.